Monetary policy can be defined as the measures taken by the monetary authorities to influence the quantity of money in the economy, or the rate of interest to try to achieve price stability, full employment and economic growth.
So, the South African Reserve Bank is the monetary authority in South Africa. If you visit its website, you'll find the quarterly bulletins that we looked at earlier, and lots of other information on monetary policy and the monetary sector in general.
The website address is www.reservebank.co.za.
Have a look, not only to help your understanding of economics, but because you'll find information that affects many other aspects of your life. On this website, the bank's mission is stated as follows. The South African Reserve Bank is the central bank of the Republic of South Africa. It regards its primary goal in the South African economic system as the achievement and maintenance of price stability. This is significant. The South African Reserve Bank regards the maintenance of price stability as its most important economic objective. And the instrument used to achieve this is the repo rate. So let's look at this more closely.
It's through something called accommodation policy that our central bank, the South African Reserve Bank, provides borrowing facilities to the private banking sector. The Reserve Bank relies extensively on its accommodation policy to influence interest rates and to achieve their primary objective, price stability. When private banks need to borrow money to finance their shortfalls or deficits, they do it by borrowing from the central bank. This is done through repurchase agreements between the South African Reserve Bank and the private bank in question. Imagine that an unusually high number of withdrawals overnight have left First Bank with a temporary liquidity problem. The bank needs 300 million rands in cash quickly to meet any more withdrawals. Private banks keep something called securities, financial assets like treasury bills, government bonds and Reserve Bank debentures. The private bank can raise money at short notice by selling some of these securities to the South African Reserve Bank. This type of deal is called a repurchase agreement, and it usually stipulates that First Bank will repurchase or buy back the 300 million rands worth of securities after 7 days. And they will also have to pay interest for 7 days on that amount. It's this interest rate that is known as the repo rate.
The determination of this repo rate is extremely important, as this is the main instrument that the South African Reserve Bank uses to maintain price stability.